Joining us now, Ron, Josey, Citi Managing Director for Internet Equity Research. So you still like it, but don't expect it to be a big winner. Ron, walk us through the call.
Well, Sarah, we're looking at, call it near-term, longer-term catalysts overall, and call it the next couple weeks into 2Q. We just heard a segment around more difficult comps, impact on demand. We just got off of earnings this week with Walmart and Target, and so there's a lot of concerns going on there. But when we fundamentally take a step back and look at where our numbers are on Amazon and think about what might happen this coming year with Prime Day in July, holidays coming up, and really our view that Amazon can absorb much of those $6 billion of incremental costs they highlighted in 1Q by the end of this year, and easier comps in the back half. We're believers that you are going to see reacceleration, even if consumer becomes even weaker than what we're seeing or hearing about today. So while we took it off the focus list, that doesn't change our conviction on the story at all.
And what about the other part of Amazon, which is the web services business? I feel like this week really started to concerns materialized about IT spending and what that would do to the bigger cloud players like a Microsoft and Amazon.
Yeah, I mean, it's almost coming at it from a lot of different angles. And frankly, a lot of our bull case on Amazon is that you are exposed to e-commerce, video, online advertising, of course, the cloud. It's interesting. There's a few different dynamics going on with the cloud overall. Of Amazon's core businesses, we probably feel best about AWS, to be honest, understood about where tech budgets might go. But the overwhelming view and thesis of ours is that everything's moving to the cloud. That's not stopping anytime soon. In fact, it's probably accelerating for a variety of reasons, one of them being cost savings, just from as an organization looks to be more efficient. And so AWS is one that we're less concerned about. On the retail side, that's where we're hearing more of the concern. And our view here is that comps are going to get better. And frankly, even if the consumer does weaken, this is a time in what we've seen in the past where Amazon gains wallet share and emerges on the outside, on the other side, a lot better.
So do you agree, Dan, with Ron that it's a good opportunity? Ron has a $4,100 price target. The stock is trading just above $2,100.
Yeah, I mean, obviously that's a little high. He's going to bring that down, right, Ron? But here's the deal. I think expectations, remain very high, at least among Wall Street analysts. There's 60 analysts that cover it. 58 of them rated a buy. The stock topped out last year. It happened to be to the week that Jeff Bezos stepped down. Okay, so here we are down 43% here. They overbuilt, they overspent. They know a lot of the inflationary pressures, wage pressures, all that sort of stuff. I think that if you want to take the playbook of Satya Nadella and Sundar and Tim Cook, that Andy Jassy is going to put his imprint on this company over the next couple of years here. And I think that down 40-some% here, I think that this is where you want to start thinking about owning a stock like Amazon for the next 10 years. Might it go lower? Of course it might go lower. The whole market is a bit of a mess right here. But I think Amazon...
So you just trashed it, but then said to buy it.
Well, but I'll tell you what I'm doing, Sarah. The last time I was on with you, you know how I'm getting exposure to some of these big names? I'm buying the Qs. I'm starting to nibble at them down here, down 30%. We know that Microsoft, Apple, Google, and Amazon make up more than 35% of the weight of that ETF. I don't really need the idiosyncratic risk in some of these names and what might be a very difficult next few months, but I like the idea of averaging into an index that is very levered to these handful of names.